we know from looking at this article that the average 401k fell by an obscene amount, Paul. An obscene amount. Now, I don't know what obscene is to you or to me or to our neighbor down the street. I suspect we all have a different definition of what obscene is. So right there, that jumps out at me as, here we go. Clickbait.
Well, and it reminds me of this. We'll go back. We replay this every now and then. I think this woman makes an amazing point. Let's give it a listen.
I love my country, but this is what's wrong with America. This is why I tell y'all all the time, think for yourself. Critical thinking. Don't believe everything the media tells you. If the media gives you information with the intent to produce an emotional response, something's not factual.
But what she says in that clip is that if you read an article and they're trying to make you feel some way, you're probably not being given facts, or you're not being given the complete facts. So you're exactly right, Jeff. I love that it says right there, obscene amount. We'll find out later in the article what the author thinks that means, but it's an obscene amount. One of my favorites in this is how they did the calculation. So right here in the second paragraph, here's what it says. For investors, the year has also been roiled by both market anxiety and changes to retirement savings. In its preview to its 22nd annual How America Saves study, investment advising giant Vanguard found that its average 401k balance was $112,572 at the end of 2022, a 20% drop from the previous year. So they're measuring year end to year end. Now, Jeff, what's the first thing jumps out at you that might be wrong with the way they calculated that?
Well, I don't know that they've accounted for any inflows throughout the year.
Exactly
right. If they're looking at
people added
401k balances.
Yeah. So people added money, and they're just saying the overall balances were down 20%. Meaning that, let's say that person added $5,000 between their money and employer match for the year on $112,000. That's closer to a 25% drop. But they don't talk about that in the article. Yep, I think that's a good catch. And they're saying significant downturn in both equity and bond markets. And people find their mood going up and down. They're talking about all that. Instead, most choose to stay put or even save more. Now, right there, that was the best decision you could make in your 401k in 2020. As long as you had a diversified basket of investments, not selling and adding more money was the strategy to be in, with it going down an obscene amount.
That's right. Because it's recovered a relatively obscene amount just year to date 2023, which we may talk about later.
Well, and this is something I thought was curious in the prior paragraph. In 2022, the number of people outside target date funds or other professionally managed funds trading actually went down, meaning that people traded less last year. Now, that would be better investor behavior than day trading. And then it gets into, given the uncertainty of the economy, it is remarkable that 94% of participants did not make an exchange throughout the entire year. Now, it is remarkable, but that is what we're supposed to do.
Correct. Particularly with these long-term, this is the longest term place for our money.
Right.
Right. So in any given month, let alone year, we should not be trying to outsmart the market, time the market. The best thing we can do for our financial future and our future self is to hold strategy.
That's it.
And if you've got a little dry powder, when the market makes an obscene pullback, like in 2022, is maybe put a little bit more in if your cash flow can handle that.
Exactly right. In fact, some of what we're reading this article, I think they could have retitled it to "The Average 401k Investor Behaved Better in the Last Year Than in Decades Before." Could just as easily be the name of this article.